One of the major theories that I have around the future of streaming is that this industry is going to play out like a lot of other digital industries where it's going to follow the smiling curve. There's going to be a handful of companies, likely just one or two, that are going to win and be the biggest distributors in streaming. That's the subscriptions that nearly everybody's going to have. Netflix, I think, clearly is one of those companies. So who is going to be the other company, or who is in the running? And I think it's pretty clear right now that Disney is taking a lead on aggregating the kind of content that they need, whether you're talking about family content, tentpole content with Star Wars and Marvel, general entertainment with Hulu, or sports. And sports may actually be the linchpin to this. This may be the company's gateway to attract more and more subscribers to the bundle that they're creating, increase revenue, and actually take a power position over a lot of their competitors. And some recent comments that I heard from a Wall Street analyst actually brought a lot of this together for me, because it's very possible that the fact that the Venue joint venture, which was Disney, Warner Brothers Discovery, and Fox, those are the three companies that were going to offer this streaming service, is basically going to be the sports streaming content. That is apparently on ice because Fubo said, hey, you can't do that. You can't collude as content providers against those of us who are distributors and create your own distribution. Give yourself preferential treatment. And the court said, yeah, that's actually right. But there is a way that they can get around this. And what this analyst said is that Fox's content is likely to end up on ESPN streaming when that goes over the top in 2025. One of the things that's interesting is that has been coming now for about a year, still about another year to go. So why is this taking so long? And I think one of the things that ESPN is working on is building a content library that is going to be absolutely unmatched in sports streaming. It is going to be the go-to place. They're going to have the most subscribers. They're going to be able to charge the most money. They are going to have the most advertising revenue. And that is going to be like a black hole for sports content. And it's going to be the go-to place if you are a sports fan. So I want to get into these quotes and what I think it means for the industry. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So first off, the way to think about the smiling curve is that the big get bigger, and the companies that are kind of losing out, that are at the bottom of the smiling curve, just are stuck in an absolute rut. And the reason for this is as you get bigger, you can afford to buy better content. So think about Disney and its suite of subscription services. Over 100 million subscribers to Disney Plus alone. You add in Hulu and ESPN Plus, you're getting closer to 200 million subscribers. Netflix, obviously over 200 million subscribers. So what does that give you? You have the most subscribers on your platform, but those companies are also, not coincidentally, charging the highest price. They can charge the highest price because they have the best content. So you have those two things working together. Let's just take a simple example. Let's say Max, who is another competitor, charges $10 a month for a subscription. They have one subscriber. Disney, in their bundle, have twice as many subscribers on the order. That's about on the order of magnitude of what we're talking about today. So they have two subscribers. But not only do they have two subscribers, they charge twice as much money, which is again about what we're seeing today. So Max has $10 of revenue to work with to build or acquire content. Disney doesn't have $10. It has twice as many users and generates twice as much revenue. So now it has $40 to buy content. So why do you see Disney winning the A block, or the best content available for the NBA? Because they can afford it. Why does TNT and Max lose out on the NBA? Because they can't afford it. They don't have as many subscribers. They aren't generating as much revenue. And so this dynamic is going to happen over and over and over again. We have seen this with recent sports rights. So ESPN signed a deal with the NBA. They recently signed a deal with the US Open. So they're going to have tennis for the next 12 years. They have content in college football. They have some of the premium content in the NFL. I think it's pretty clear that when they go over the top, they're going to have the absolute best streaming sports content available. That means that they're going to have the most subscribers to their streaming sports service, and they're like going to be able to charge the most money. Now, the company that fits into this, and the reason that the Venue deal was so interesting, is Fox really doesn't have a way to get their content onto a streaming service at this current point. So who has the biggest streaming service? Who can write Fox the biggest check? That would be Disney. So I want to go through what analyst Stephen Cahill said. Stephen Cahill's from Wells Fargo. He said that almost all subscriber acquisition for streaming services happens when they have sports on. So you think about Peacock, just had the Olympics. Great customer acquisition tool for them. Seems like that is something that has been consistent. The NFL season is starting. That's obviously a huge thing for the cable networks. And so he goes on to say, for $30 or $40 a month, if I'm a college football fan, I can go to the ESPN flagship. This would be after it launches in 2025, especially if it has Fox included, which I will. Now, this got to a back and forth with Matt Bellany, who hosts this podcast. But Cahill said, I think it will be licensed. The Venue lawsuit says joint behavior by horizontal actors gets a lot more scrutiny than unilateral behavior. So what exactly does that mean? That means if Disney and Fox are working together to create a joint venture and setting prices for that joint venture, and they're giving themselves deals that they wouldn't necessarily give to somebody else, that is probably illegal. What's not illegal is for Disney to say, hey, we have a distribution service, a streaming service, and Fox says, hey, we have some content. Would you like to license that content for us? This happens all the time, whether you're talking about streaming, whether you're talking about cable. So that would likely be okay in the eyes of courts and regulators. And if that happens, if, let's say, for example, the NFL games on Fox or any of the college football games that are on Fox end up on the ESPN streaming service, who could possibly compete with that service? It would have to be a niche service. It's going to have a much smaller customer base. That could really put ESPN and Disney in the power position in sports. And that's where I think the company has the most leverage long-term. And we are not even seeing this product in their financials. We're only seeing the foundation being built of the bundles that Disney will eventually offer. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So what would the potential financials of this look like? Well, this is Disney's recent earnings report, and I want you to look at sports. Sports right now is about an $18 billion a year business for Disney, and the profitability of this is started to go down now as they're losing subscribers. Going to make, let's call it $3 billion a year in operating income from this sports segment. So now think about what a flagship ESPN over-the-top streaming service looks like. If they are indeed charging $30 a month for that service, let's say they can get 50 million subscribers. I think that's probably on the low end, but that would be $18 billion per year in revenue. On top of that, you would have any sort of advertising revenue that might be available or any partnerships. They have a partnership with Penn National to advertise some of their gaming. So there is going to be ancillary revenue on top of that. But I do think that even in the relatively near future, an ESPN streaming service could be just as big, maybe not quite as profitable yet, but getting close to being just as profitable as the traditional ESPN service that they had before. And now this is going to be something that's going to be direct to consumers. You can be able to bundle that with Disney Plus, with Hulu. So now that Disney bill that they're getting overall for each consumer, maybe that goes to $40, $50 per month. If that subscriber base is now goes from, let's say, 50 million to 100 million, or heaven forbid, 200 million, like we have for Netflix, that's where you see massive upside in the financials for the streaming business. And I think that's really the upside for Disney right now. We're kind of in this valley where they're building the foundation. They're building out not only the technology, but also these distribution relationships, bundling services. And in the background, they're building the sports empire, the content that they need to launch these ESPN over the top. So every time you hear one of these deals where ESPN agreed to distribute a certain piece of content for the next 10, 12 years, that is another tool that the company has, another customer acquisition tool, another churn mitigation tool that the company has in the future as we go to sports streaming. And I think Cahill's argument that actually other companies are going to come along for the ride as long as Disney writes them a check, that could be really compelling, and it could actually put Disney in the power position for the foreseeable future in sports streaming. So let me know what you think about the potential of Fox working with Disney, helping create ESPN to be a juggernaut in sports streaming. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.